Hello friends, how you guys doing? Welcome to Fab Crypto YouTube channel. Alright guys, so in today's video guys, we're starting a new series on how to trade Bitcoin like a pro using different market parameters. Alright, so in today's video guys, we're teaching you guys how to trade Bitcoin using wave theory. Wave theory is one of the kind of the best analysis of the market because it explains the fractal natures of the market. And when you talk about wave theory, you talk about Dow theories, and you also talk about the Elliot theory. So so most times I use both. I combine Dow theory and Elliot wave because of some fractal nature of the markets. But today I'm going to simplify how you can look at the chart and what you guys should be looking at for in any chart and how you can be profitable in the long term. If you think that is interesting to you, please kindly subscribe to this channel and also like this video guys as we dive into the chart. Now after teaching you this theory and how you can apply it, we'll now use it to analyze this wave. I think that will also help you to understand it the more. Alright guys, so before I dive into the rate chart, let me establish the fundamental of the wave theory. Now, when you talk about the wave theory, wave trading, kind of Elliot wave, Dow theory, let's start with Dow theory because Dow theory came before Elliot wave. Dow theory established that every market moves in three waves. So that is to say, market makes an impulse and market corrects himself and market makes another impulse. So now the first wave here is called what? An impulse. Impulse is simply defined as any movement in the direction of the trend. And this one actually is tagged a correction. The correction is that a movement against the trend, So from here to here is a movement against the trend. And after that, you will see another impulse going on. This is actually a Dow theory. All right. Now, but Elliot's wave on its own establishes a 5-wave move and a 3-wave correction. So if you see that what Elliot's wave establishes is that every market moves in wave 1, 2, 3, 4, 5, and after that 1, 2, 3. All right. So if you combine, look at the Elliot wave fractal nature, you can see that inside this there are 3 waves here. 1, 2, 3. We have also 1, 2, 3. And we have here 1, 2, 3 down before you start going up again. So there are similarities between this wave and this, irrespective whether they are moving in 5-wave or they are moving in 3-wave. Now, the greatest problem when you talk about Elliot wave is identifying the wave. Knowing what you can call a wave and what is 1 wave, 2 wave, 3 wave. And that is why when you give one chart to different Ellioticians, they will give you different level. It's not the level that determines the direction, it's actually the structure that determines the direction. So I want to teach you today how you can simplify the wave theory by looking at it and knowing exactly what the market is doing and what to look out for exactly, and when you should be able to enter the market. All right, so now let's establish what an impulse is, because every market, since we have seen that there are similarities between Dow theory and Elliot theory. So now the first thing you should be thinking of in any market is what is an impulse. Now, after this impulse is completed, you should be expecting what? A correction. And this correction now, there are different patterns of this correction. Then after that, you should be expecting an impulse. So if I should ask you, which one do you want to trade? Is it this sharp wave or this sluggish wave or this sharp wave? We understand that every market is plotted time, the price and time. This is the price, this is time. This is how every market is plotted. So everybody's interested in the price, but it's actually the time that determines the price. So the one that takes more time is this correction, and after that, the one that makes us more money is this price as the market is moving up like this. So everybody's interested in catching this wave, but you can only catch this uptrend, that is the price as it's running up or down, when you are able to understand this correction. Now, I'm going to delve into the correction to explain what are corrective pattern. We can take few today, later we'll cover it more. So when you talk about correction, that is what happens here, because this is actually where the bulk of the time is being spent here. what actually is happening here. So for Elliot, they say that in correction we have like over 13 patterns. All right, so the first pattern that we need to talk about today is what we call a flat. A flat is that the market makes an impulse, it makes a correction like this, okay, and after that it starts going up. Okay, so this is a flat. We have the flats that this one can retrace to this point and it goes up. Then the second one, when market makes a running flat, the market corrects itself like this, it goes up again, it comes down again, and it goes. You can see how this one plays out. This is also a correction. We call it a running flat. We also have an expanding flat. Market corrects himself, it goes up again, it breaks up, you think it's going, it comes down again, it breaks down, you think it's going down, and finally it starts going up. Okay, this is what a expanding flat. Okay, this is an expanding flat. All right, so we also have a regular this is a regular as running expanding. We have seen other one that maybe they call it zigzag. A zigzag in a situation whereby it can be as a regular flat, but it comes up like this, it goes down, it didn't retrace up to this, and it goes very down like this. Okay, kind of a zigzag, and it goes up. All right, so we've seen this most times happening. Then after that, you also have a triangular pattern whereby the market makes what? Corrects himself like this, goes up like this, goes up like this, goes up like this, and after that you'll be able to break up or break down. So this is another correction. This is a contracting triangle. We also have an expanding triangle where the market goes just expanding on this way, and after that it breaks up like this. Okay, so these are the corrective structures have been identified. Almost there are like 13 of them, 13 patterns that you can study on that. All right, so now, but our main task, you know, is to identify these structures, all right, on the market. So ability for us to identify this structure will give us an edge over the market. All right, so that is one thing that you should be looking out for, because when you're able to identify the structure, one thing, it will take away guess from you now. And you should also they say that Elliotians, or people that understand wave theory, are market makers, because you're able to understand what the market is doing, because the bulk of the transaction happens here, guys. This is what determines the transaction that is going on. Like whether Elon Musk is buying Michael Saylor is buying Bitcoin, whatever is going on is what happens here. Okay, when the market is moving vertical, up or down, there is no transaction, you know, right? So, but ability for you to catch this move is here. So, in a summary, what you should be looking at for, guys, is every market that makes an impulse, market corrects himself, and market makes an impulse. So your job as a trader is to catch this impulse, all right, after this wave is completed. All right, even if you miss this, it doesn't matter, because most times you might not know when this is forming, except you have advanced in your career, you know, well able to know this. But it takes a lot of high discipline and accuracy for you to determine the first wave. But now, once the first wave is completed and you're able to identify any of this pattern plays out here, then you're able to catch this move. And most times this move is very, very aggressive. This is where the Elliot wave can play out. They say that there is three-wave move. Three-wave is always bigger than the first wave, and after that there's a small correction again and the next five-wave move. Okay, so you see that the potential profits that is there for you to make is bigger than what has happened in the past. All right, so now in a summary, ability for you to identify the correction will give you an edge to make money for the next move. All right, so we're going to go into the chart protocol now and be able to see how we can identify an impulse and how we can identify a correction, and after that how we can get the next wave. Now, before we dive into the real chart, I think we need to explain also the patterns of what an impulse. Those have shown you different patterns of a correction. Now, when you talk about impulse, an impulse can be a very sharp move like this. Okay, an impulse can be a sharp move. An impulse can also be 1, 2, 3, 4, 5 wave up. Okay, an impulse can also be what? A leading diagonal. Okay, leading diagonal like this. Okay, an impulse can be a leading diagonal. All right, so these are the impulse that you'll be able to be seeing on the chart before you can say, okay, this is wave 1, we have a wave 2, and then we are going for wave 3. All right, guys, let's dive into the chart. So where are we going to start? All right, let's just start from what has been happening, okay, all this while since this crazy correction has been going on, okay? Crazy correction has been going on. So we can see from the daily, this is daily chart. This is daily chart of Bitcoin. So what are you seeing on the chart? You see, market makers, they define their price before anything else. For market takers, they take anything. Bitcoin is going up, or you just go and buy. Why are you buying the market? What purpose? What wave are you trading? Because if you don't know what you're expecting, you see, to enter the market is very easy, but exiting is very, very difficult. To exit the market is very difficult. So what are you seeing? What determines your buy entry? All right, if you take a look on this correction from the daily, you will see that there is not much patterns you can see here on the daily chart, because the pattern here looks a little bit sluggish. But for you to see this thing clearly, you need to go to 4 hours before you can see most of this pattern clearly. But as an advanced trader, we can clearly see from here now that there is an impulse here. There is an impulse here, but this correction here on the daily is not clear. Also, there's an impulse here. This correction is not clear and all that. So let's dive into 4 hours for us to do this proper in a nice, clean way. Now, coming to the 4 hours, you can see what are you looking for? You are looking for what? An impulse. So the first thing you should look for when you are analyzing a chart is what? An impulse. An impulse. If there's no impulse, I've explained what impulse is. There's no trade. So it is that impulse that's kind of a foundation you should be looking for. So first of all, there is what? There is an impulse here, guys. There is an impulse here. Okay, so good, we have seen an impulse. So what are the waves that forms after the impulse? You can see on the 4 hours, there is no clear structure here. But if you want to trade the next wave, that means you need to go down to 1 hour. So for this purpose of this video, let's also go down to 1 hour, guys. Let's also go down to 1 hour so we can be able to see what the market is actually telling us. All right, what the market is actually telling us. So this is where we are when this whole stuff started. So you can see now clearly that after this sharp impulse, what do we see? We see 1, 2, 3. Okay, this what of? Do you remember this pattern we called that way? This is what kind of a zigzag pattern. Some people still call it regular flats. Well, this is a zigzag pattern. Okay, this is a zigzag pattern. So it was after this pattern was completed here that we see this wave. All right, you can see that what we learned now, we were able to apply it clear here on this. You can see after this impulse, we have this correction and we are seeing the next impulse. So our job is to trade this. Our job is to trade this. And we can see now we've traded this and we make money. All right. So what should you be looking for after that? You should be looking for the next impulse. So assuming this is our next impulse, we are waiting. Maybe for now, we might be thinking, okay, this is going in a 5-wave direction. So be waiting for the next pattern for us to enter the trade. But you can see now, if you understand pattern, that this, okay, did not complete anything. You can see this market is not trending, kind of. So obviously, we should be expecting a breakout of this for us to be say that, okay, this wave has completed, because looking at this, it doesn't match any of the patterns we listed. Instead, this kind of a contracting, and when you're talking about contracting, for you to know the sense of direction of a contracting pattern, it must break up or break down. But you can see now, actually, eventually, this thing breaks down. So telling us that this is just a 3-wave move. Okay, so that is by the way. So first of all, you can see that the first wave we were able to see, we are profitable, and because of wave theory, it saved us from jumping into this trade, because a lot of support and resistance guys, they actually jump into here and they lost money when they were trading because they couldn't identify that this is not trending anywhere. So the next thing you should be looking out for is an impulse. An impulse. So clearly we've seen an impulse here. We've seen an impulse. downwards. So what are we looking for? A pattern that we identify. We see what 1, 2, 3. What can you say about this pattern, guys? This is what? A flat. And after that, what should we be thinking of? The next impulse like this. We made money, clean money. We made money here. That is how we trade, guys. So after that, you exit. You see, once you make money, you see, trading is like, I tag trading to be like robbing a bank. Trading is like robbing a bank. Now, why do I say it's robbing? Because there's a lot of uncertainty in the market. So once the market, you're able to succeed in that your robbery, that is make money, man, you need to take that money out and run out. Because if not, they will catch you, and all the money you have made, you will give it back and still pay more on top of it. But investing is more like opening an account in the bank. All right, you want to partner with the bank. So when you're an investor, you don't need to panic. You just need to put in your money there, and you're able to have it, leave it there for a long time, and you see your money grow. So that is it. So now we've seen another what? This is another impulse. 1, 2, 3, 4, 5. Okay, it's another impulse. So after that, there is a correction here. There's a correction here. After this correction, you can see the next wave impulse here. We made money. All right. So that is all you'll be looking out for in the market. So this is another impulse. This is another correction. This is another impulse. So that is how those things play out. You can see here, this is another impulse. This is another correction. This is another impulse. You can see I'm able to identify all these because you see I've been trading like this for a very long time, and identifying a structure, you know, it's easy for me to do that. If you like what you've been seeing, guys, please kindly subscribe on this channel, guys. Help us to grow on this channel, and I'll be dishing out potential setups on how you'll be profitable trading any instrument, whether crypto or whether forex. So you can see now, this is another. After this correction, we have this impulse. After this correction, we have this impulse. Okay, so you can see that it is when you are trending, that is when you make all the money from the market. Okay, so look at this massive impulse. Anytime there's an impulse, so you should wait for what? A correction. This is a correction, you have this impulse. This is a correction, you have this impulse. Okay, so anytime there is an impulse, also wait for a correction. Okay, this is a correction, we have this impulse, it's going up. Okay, so now you see, how do you balance this? Is a regular flat, is a regular flat, a regular flat. You can see that often that Bitcoin makes more of regular flats and stuff like that. So you can see, look at this trade. This is an impulse, very sharp. This is a correction, and down we go. Okay, so all over. So let's go to the current situation of the market. Excuse me. Let's go to the current situation of the market. Now, what are you seeing, guys? What are you seeing here, guys? You can see current situation of the market. Now, let's start from here. We've made what? An impulse. We made an impulse, we made a correction, and see, here we go. Now, currently, now you can see this one is an obvious what? Impulse. So where do you expect the market to go? Now, I believe by now you should know the answer. So we're expecting the markets to correct himself. After that, maybe you can push up to break this, but after that, it's coming down. So you don't need to rush into the market now. All you need to do is to wait until this pattern is completed before you take the next wave. But looking at it from the 4 hours, let's analyze Bitcoin now. The last low, okay, this is the lowest point so far on Bitcoin since this correction started. It makes what? An impulse. It makes a correction, it makes an impulse, and it comes down again. Now we can equate this to be what? We can equate this to be a expanding flat, and after that it goes up again to next impulse. Now it makes this high, it comes down again, an impulse, excuse me, it corrects himself, and inside correction we see what? Another correction. Okay, this is where what we term, this is a kind of complex structure. It's making a complex structure, and it tag this low, it makes one. So here now we can equate this to be what? A correction. So we have this correction, we have this correction, and we have this correction. So this is a complete structure, guys. This is a complete structure. That is A, B, C. Okay, it's a complete structure so far that Bitcoin has made. Okay, so but now we've seen A, B, C, A, B, C. So what you should be expecting here now is the next wave up. That after this A, we have a correction here. We are seeing B here, guys. Okay, so as simple as that. That is what we're expecting on Bitcoin. All right, so that's what we're expecting on Bitcoin. So ability for you to wait is one. Ability for you to identify correctly the pattern that the market is forming is two. So now we've seen what we are expecting in a long term. So if you go down to 1 hour, you can see that this wave is still forming, that you need to wait for it. So based on what we've learned so far, you don't need to jump into the market here until the market is completed, until you identify a pattern you know. Okay, until you identify a pattern you know. Breaking this might be, yes. So having understood this simple stuff, there are rules that guide these guys. There are different rules, like using fib levels, and using some rules that invalidate the patterns, because there are some patterns you'll be expecting, and when that invalidates, that cancels the whole structure, and you'll be waiting for the alternative structure for this. All right, so guys, kindly subscribe on this channel, guys, and if you like to learn this in a full term, please kindly contact me using this detail below. I'll be glad to help you to remain profitable. All right, so now in Bitcoin, so guys, I think we have what should be expecting is this. After this wave completes, we are expecting next impulse. Then after that, there will be a bigger correction before we go. Okay, there will be a bigger correction before we go. So if you're an investor, you wouldn't mind to just buy at this time. But if you're a trader, wait for the correction to complete. Based on what you can study more of this and know your strategy and entry and exit position before you can take the next trade. Thank you for your time, and see you on the next video.